Hello and welcome back to CoinLady channel. The regularly scheduled crypto news and analysis has resumed. And today, we will be discussing Ripple and its token Xrp. With that in mind, let's get right down to business and begin with this video from 8to1_XRP. Yes, it's clear that SEM, according to Selim of DBS Bank, the Saudis' decision to use renminbi instead of the dollar in oil trades beginning this month has profound long-term implications for the value of the dollar. Yes, the dollar is showing signs of a slight good rally as we speak. But I see this gathering as a rally for the purpose of providing aid. At some point, we'll reach this red line and be rejected once again. If this trend continues for another 5 days, from the bottom to the top, you will have gained about 3%. After that, I anticipate a barrage into the supply area. That's the next major pillar of support, if you will. That's a loss of about 5.51%, and it looks like the ranges are going to keep shrinking from here on out. In the meantime, we have been able to successfully rebound from this pleasant fib level. For all intents and purposes, this seems to be the 618. The 618 fib level is a great area for it to bounce off of, and it has been a while since I last checked the US dollar chart. Though I don't anticipate it, I will be worried if we keep having breakouts. Although I believe this is a knee-jerk reaction to the employment report, I do believe that the status quo of the US dollar, both in terms of its dominance and its value, is in question. For this reason, we have been keeping a close eye on the petrodollar deal with Saudi Arabia and the country's recent actions, particularly the CBDC that it has announced it will test. Saudi Arabia has been trying to wean itself away from the US dollar for some time. Thus, a major event is unfolding, and its future outcomes are uncertain. However, we have also been keeping an eye on the global liquidity crisis that has been developing simultaneously. Right now, something is cooking here. It has begun to percolate into a few key areas. To be perfectly frank, I'm not sure what the solution is. If any of you have any idea, please share it with me in the comments. I did in fact include an XRP tag there. In just a moment, we'll be discussing precisely that. But yeah, we're finally getting going here. The Pakistani oil industry is on the verge of collapse due to a liquidity crisis, as reported just yesterday. As the dollar liquidity crisis continues and the cost of doing business for oil companies in Pakistan skyrockets due to the devaluation of the rupee, these companies have warned that the industry is on the verge of collapse. In fact, this is a phenomenon that is shared by countries all over the globe. The Lebanese pound has just been devalued by 90%. A liquidity crisis is developing, and it is tightening around the world. There are numerous problems with economies all over the world at the moment. We can see quite well from this vantage point below. The International Monetary Fund, IMF, has established a number of prerequisites for restarting the bailout, such as allowing the local currency's exchange rate to be determined by market forces and reducing fuel subsidies. Sorry. Both of these prerequisites have already been met by the government. A liquidity crisis, or crises, if you will, very similar to what we saw in 2008, will cause the financial collapse we are actually talking about, in my opinion, within the next year or two at the earliest. I'm aware that contradicts the Bitcoin possessing chart that everyone is promoting. In fact, I made it myself and posted it on Twitter. You will get wrecked if you follow the Bitcoin halving chart and play into that, I warned them. And I'm saying it here because, having studied the macroeconomic trends affecting the entire economy, I'm concerned that another crash on the scale of 2008 could occur within the next year or two. And these liquidity crises are going to cause it, and one is already brewing now. It's not just XRP, either, as we consider potential solutions. Carbon markets benefit from blockchain and cryptocurrencies' increased liquidity and scalability, which in turn drives fair prices and expands suppliers' revenue shares. These are not your typical carbon markets anymore. It encompasses all of the significant markets. While this is certainly relevant to the carbon market, it's worth noting that this April 2020 discussion appears on the Ripple website. Around the year 2020, I read this and thought, yes, of course this is true. To the point where I didn't really get it until I read this post. From that point on, I just kept piling up XRP because I knew what was going on with the economy everywhere else in the world. Liquidity and Global Markets 101 was published on the official Ripple website shortly after March 2020. We are indeed witnesses to events that resemble the 2008 financial crisis. What is happening in today's global markets will be the subject of books for years to come. However, similar to the economic downturn of 2008, industries tend to strengthen one another through collaboration. Educating people on the basics of liquidity and why it matters in the global markets is more important than ever. Conceptually, it's very simple. If an asset can be quickly and easily converted into cash without disrupting the market, it is said to be liquid. When there are more potential buyers and sellers, transactions can be completed more quickly because of the increased liquidity. This bank acts as a facilitator between buyers and sellers in the market, and they use U.S. Treasury bonds as an example. When the stock market falls, investors usually seek refuge in the bond market. Because the gap between sellers and buyers' asking prices is narrow, the market is more liquid as a result of the increased activity. Now, let's take a glance at a few XRP-related things at the same time we're concentrating on this. So as we focus on XRP, they do mention about the increased liquidity around XRP in terms of how fast it could be sent or received and all that kind of stuff. They also brought up on-demand liquidity, which is something we're all familiar with. However, after taking a closer look at the markets as a whole, and at XRP specifically, I've come to the conclusion that XRP has the potential to alleviate many of the problems plaguing the global economy at the moment. There is no doubt that XRP could help alleviate a liquidity crisis, but will the government investigate it? Will governments in these regions investigate XRP? Not quite, but we might be able to provide liquidity for a few things in the government sector, even though Ripple with on-demand liquidity already represents 90% of the FX market. This means that CBDCs should be considered when thinking about the financial and economic future. The next step forward will be CBDCs. All of you are aware that we have been discussing this, and yes, I do think that XRP will play a significant role. As a private ledger technology, the XRP ledger will play a crucial role here, and you can see how it enables cryptasset and cross-border transactions when linked to another CBDC below in terms like interoperability. When it comes to providing liquidity and serving as a medium of exchange, XRP is the currency of choice. Now, to what end do I think things are so bleak at the moment? Also, what makes me think a liquidity crisis is on the horizon? Let's check out the latest Federal Reserve-related post on Cointelegraph.com. Yesterday, Fed Chair Jerome Powell said that the central bank could not prevent a default on government debt. With the help of government debt purchases, their balance sheet grew by the trillions. The Fed has suffered paper losses of nearly $1.30 trillion since 2020. Irony. Now, please find the sum of all of our possessions below. Let's review the information we just read about liquidity once more. This occurred in April of 2020. Because, once again, history doesn't tend to repeat itself, this was posted back when we were just beginning to see those events unfolding in relation to a possible rhyme in 2008. Most of the time it rhymes. Exactly where is this going to go down right this minute? Exactly when will the financial crisis of 2008 begin? And it will probably occur in 2024 or 2025. And if I had to guess, I'd say we could see that major drop as early as the fourth quarter of this year. According to the latest employment data, we are currently not in a recession. And it's evidence that the economy is doing well in terms of jobs and employment and big businesses like these. But for the time being, let's concentrate on financial obligations. In the fourth quarter of 2020, American credit card debt hit a new high of $930.6 billion, up 18.5% from the same period the previous year. What does this imply, then? Debt levels have been rising alongside interest rates. Taking a look at this, it's not a good combination. Let's forecast the next few months, all the way into the fourth quarter of this year. Here's why I think there'll be a catastrophic collapse. Most people won't be able to spend money or make purchases once interest rates hit the market because the cost of doing so will be too high for the average person or retail consumer. As we enter this crash, it will be similar to the one in 2008. Regarding crypto and stock markets in particular, I anticipate a rapid decline similar to that which occurred in 2000 and 2020. Does this new information suggest that 2019 won't be a good year for cryptocurrencies? Definitely not. A lot of people are targeting 50K, 60K, etc. And a lot of people have their own scenarios, but again, I'm just really targeting a time frame. I think that scenario of a possible wave 5 will play out by around Q3 or the end of Q3 this year. Though the third corner appears promising, it is possible to observe the debt markets and the general state of the macroeconomic outlook, both of which most people are ignoring because, hey, prices are going up. So it looks like we're making progress, yes? Certainly not, that's not the point. So it seems like the IMF is warning China that it needs to take more action to address its housing market. You don't say that the property market, which accounts for roughly a quarter of China's GDP, is a drag on growth, especially since Beijing began cracking down on developers' heavy reliance on debt in 2020. Along with sorry, I can't remember that, therefore, it was perennial. Just what you said it was. The name escaped me, but this is when the topic of Evergrande began to be discussed at length. In 2021 we first saw them emerge, and everyone was like, okay, well this is going to crash everything and all that kind of stuff. In reality, though, the opposite transpired. The market went into somewhat of a parabolic rise. But considering the debt problem and interest rates, it's clear that things can't continue like this indefinitely. In a way, we've already arrived. The Fed's balance sheet looks crazy to me right now. Not only have they lost $1.30 trillion over the past 3 quarters, but there seems to be a global issue developing. Indeed, I recall covering the government debt spiral in a report that I filed in 2021. So, there isn't a flood of new money coming in, and that means what? The Fed is currently losing money. Insanely, they are preparing for declines in the face of all the talk of economic recovery and widespread celebration of the latest jobs report and signs of economic expansion. Not only did we not experience a recession, but also. However, that is not the most likely outcome. To give just one example, the Bank of Japan has accumulated unrealized losses of nearly $70 in light of current events around the world. That seems crazy to me, especially since Japan is also a major holder of US dollar bonds. As it turned out, they held more US dollar bonds than anyone else. And then we travel over here. As a result, the Bank of Japan bought more long-term Japanese government bonds in January than ever before in a single month. Once again, Japan's money printer has gone wild, drawing international attention. Even with countries like the US, they're thinking things like, okay, well, when money printed, we don't need a money printer to, go live in order for us to go parabolic on assets. In fact, when we consider the current state of the economy, that is precisely what led to the current situation. What's wrong with the economy now is the same thing that wrecked it in 2008. People are taking on too much debt and spending more than they can afford. To a large extent, market participants have taken on too much debt. Also, I always say that trading in futures is very similar to trading in cryptocurrencies. In my opinion, everyone should just stay away from futures trading altogether because most people get in over their heads with debt when they do it. As a result of their financial misfortune, they are now completely penniless. To a large extent, this describes the typical person's way of life. A substantial amount of debt has accumulated on their part. Inflationary interest rates are linked to the debt. As interest rates continue to skyrocket like we are seeing over here from Gold Telegraph, this debt here is going to multiply from the interest rates, and with interest rates they haven't even hit the market fully yet. When they do, it's essentially game over. The idea of like up only in this market, which most people have been paying attention to instead of being realistic, that's going to end. Now, what I have been keeping an eye on, and why I did choose to include Japan in this video, is that the country has been a significant purchaser of US bonds. Also, Japan has a huge amount of US debt. So if we're starting to see Japan crack, then guess what? Guess what comes after that? The US economy will likely start to falter soon. Here we go. True, we've seen some of this already, but things are only going to worsen from here. I believe that the dollar will continue to decline and that risk assets, including cryptocurrencies and the stock market, will begin to experience meteoric price increases in the time remaining before all of this becomes fully realized. Now, one topic I've been discussing in relation to crypto is also where we stand right now. We have started to peak over this major resistance area, but until we break out of this zone up here at roughly $1.15 trillion, I will remain cautiously bullish on crypto as strong pullbacks to demand areas, such as this like $870 billion range, are still possible. We could do a back test around $940 billion, or we could just use that as a great supply zone. Nonetheless, I think it's important for you to know that we're taking a lot of precautions right now. I still think it's best to exercise caution. I don't see how any of this can be maintained with the Federal Reserve acting the way it is. The current state of the economy isn't sustainable in any case, but it's easy to see why some countries want to abandon the US dollar. Debt spending and losses are spiraling out of control. Now that that's out of the way, I really do hope you guys enjoyed the video. If you did, please hit that like button and subscribe my channel. See you later, bye.